From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April 6, 2017. In a moment we're going to be taking a look at the USDJPY, the US dollar versus the Japanese yen, for today's trade analysis. But first, a recap of a couple of the trade suggestions made over the past few days, and also a quick note about the news today. We only have really one high impact piece of news today. That's unemployment claims out of the U.S. at 8:30 a.m. Eastern U.S. time. We also have Canadian building permits at the same time, medium impact news. Everything else for the rest of the day will be low impact, and really we have to wait until we get all the way into either 4:30 a.m. tomorrow morning, some news out of the UK with manufacturing productions, and probably most importantly will be the Canadian employment data and US jobs report coming up at 8:30 a.m. tomorrow. So today, a pretty light news day on the calendar. Okay, looking at the NZD/USD, we've been in this trade for a couple of days. In fact, we've traded this currency pair a few times over the past 2 weeks and made some significant profit on this pair. We're still in the short. You can see it going down here at the bottom of the chart. 70.10 is the entry. I have locked in the stop loss with 15 pips of profit. I can't lose on the trade. We've also closed some of the profit on the trade. If I zoom in one more time in here on the daily time frame, look at how it's just been walking right down this blue trend line for the past couple of weeks. We're still there. So I would say that as long as it's still underneath that pink shaded area in the blue trend line, that still remains your focus. You're still looking for it potentially to find resistance right here just underneath the 6,900 level, and maybe make another turn back down towards 69.50.40. And if we can get through 69.40, I think we're looking for a challenge all the way back at the bottom of the chart into the 6,900 level. Take it down to the 4-hour time frame. Doesn't really change it. Just look at that congestion and resistance right here at the pink zone. For the time over here, support, we can see support, and now offering resistance right underneath that trend line. So don't buy it right now, that's definitely for sure, but watching for other evidence and a possible opportunity to go short once again. For the New Zealand dollar today, take it over here to the AUD. Yesterday we went short, or put a pending order to go short at the bottom of the purple shaded area, 75.85. The market came up, finally took us into that trade. 75.85 is the entry down here at the very bottom of the chart. Of course, the trade manager has us locked in with 5 pips. We can't lose. It has settled down here into support, into the yellow zone. We spoke about that potential yesterday, just like what happened back here with this blue circle is. It bounced between the orange and the purple zone a couple of times. So we're seeing a very similar situation where you see the blue circle on the left-hand side. We definitely would want to see a push through 75.40. Getting through there, we could see a continuation down towards the 7,500 level today for the Australian dollar. Take it on over to the USDJPY, US dollar Japanese yen, for the past couple of weeks now. After falling a significant fall from all the way up here into the mid 115s all the way down here into the 110 level, significant fall along the black trend line, we've been bouncing around back and forth inside this black box for a couple of weeks now, finding support at 110 or just above 110 and resistance into the 112 level, the green shaded area at the top of this black box that you see. The green zone, follow it back, you see the 2 circles, that is support. So if we're going to see this currency pair turn around and go back up, it will be an imperative that it breaks 112 in that green zone, top of the black box, which it hasn't done yet. If it's going to continue the downtrend, it will be imperative that it breaks the yellow zone, our supports, at 110 to continue the downtrend. Until it does one of those two things, we're in a range, and we need to be looking for opportunities to trade in the range. Now, tomorrow, of course, significant U.S. data with the jobs numbers. If the ADP numbers from Wednesday are any precursor to what we might see tomorrow, that would be good news for the U.S. In fact, yesterday we saw on the ADP news a significant push back into the 111.35 level, the blue zone, that spike high. Let's go ahead and zoom it in one time there on that spike high right there. That spike high right there was the ADP news from yesterday. If that has an effect tomorrow in the same way on the yen, we might look for another challenge of 111.35 or maybe even towards 112, the top of our range, and significant change, even pushing higher back into the 112s and 13s for the yen. If anything, just looking at the range, you would want to buy low at the bottom or sell high at the top. So we're closer to the bottom, the pink and the yellow zone. So that's more encouraging to look for an opportunity to go long than it is to go short at the bottom of our range. And really, I wouldn't be encouraged to go short unless we were way up here at the green zone, as a possible resistance into the top of the range, or breaking through the yellow zone as a continuation of the downtrend. Until then, I'm looking at possible supports. We've already seen it here at 110.35 here and here over the past 3 days. We know that the ping zone also has the potential to show support. How do we know that? Well, just look back here just before the black trend line support there. So, and even over the past 2 days, we've seen just congestion holding in between 110.65 and 85. So we're there now. So a push back above 110.85, we look for this to continue to go higher, back to the blue zone, maybe back to the green zone. Only really if we see an open and close underneath 110.65 do we expect it to go back to the yellow shaded area. Take it down to the 4-hour time frame. It really doesn't change it. Let me squeeze it back out like this. It really doesn't change any of that. We see the market coming off of the yellow zone. Yesterday's news sending it higher back to the blue zone. Then eventually it turned back around. So here we are bouncing once again off the yellow zone. We're looking for a push back above 110.85 and a continuation back to the blue zone or higher above the blue zone. 111.35 will be back in towards the 112 level, the green shaded area at the top of the chart. So at least right now, I think is a better idea to look for a long scenario than a short scenario at the bottom of the range. So dipping into support or breaking through the resistance become our opportunities to go long for the US yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.